Hello everyone, I'm Alex here. Today's video, I'm going to touch on property loan. That is one of the key components when you're buying a property. So I'm going to share two examples to show you how does the loan differences help you in terms of your property purchase. So why is it so important to understand property loan? Because it is a big component of your next purchase. And I got buyers above the age of 50 having difficulty getting a decent loan amount. Before we move into the example, we need to first understand how TDSR works. So TDSR, there's three main components. First, the age of the buyer, which will determine the loan tenure. Second, the income of the buyer. And third, the interest rate that's fixed at 3.5%. So out of these three components, there's one that's changeable, which is the loan tenure. For loan tenure, it will be determined by the percentage of loan that you are taking in your property. So there's two main types. First is a 55% loan and second is a 75% loan. So what is these two differences? For 55%, you'll take 75 minus your current age. Let's say it's 50 years old, which means you still can take a 25 years loan. But whereas for a 75% loan, you can only take 65 minus your current age, 50 years old, then you can only take a 15 years loan. For those buyers who think you can't afford a property that you like, this particular video will be very useful to you. Now I'm going to use two examples to show you how it is done. The first example I want to go through is based on a purchase price of $1.45 million and an income of $6,000 and a buyer at the age of 45 years old. Based on this example, if the buyer is looking at 75% loan, which means they can only take out a 20 years loan tenure, that will work out to $620,000 loan and a down payment of $830,000 with an installment of $2,991. But whereas if you are taking a 55% loan, your loan tenure will increase to 30 years, which will increase your loan amount to $800,000, which means your down payment is $650,000 and your installment is $2,760. Because of the additional 10 years loan, the 55% is a better choice, as you are paying a lower down payment and yet you are lowering your installment also. The only setback is that you got to pay an additional 10 years. Second example, I'm going to use a purchase price of $2.25 million with an income of $12,000 and an age of 55 years old. If we base on a 75% loan, in this scenario you can qualify for a $728,000 loan, which means your down payment is $1.522 million and installment is $6,536. Whereas for a 55% loan, your loan can go up to $1.237 million, and which means your down payment will be $1.013 million and your installment is $5,983. Based on these two examples, you only show one thing. There's still ways to finance your dream home even if you are getting older. So if you want to find out more, feel free to contact me and I'll see you soon.